4% wiped off oil prices in a single afternoon, and the ripple effects are just getting started. This is the Financial Brief. West Texas Intermediate crude dropped over 4% on Wednesday, falling to $90 a barrel after Secretary of State Marco Rubio told reporters the U.S. will give diplomatic talks with Iran every chance to succeed. Brent crude slid nearly 4% as well, settling near $95.78. Here's what's driving this move. Iranian state television reported that Tehran has committed to restoring commercial traffic through the Strait of Hormuz to pre-war levels within 1 month of any agreement. That strait is critical. Roughly 20% of the world's oil supply flowed through Hormuz before the conflict began. Note, unverified. If a deal materializes, that bottleneck reopens, and global supply gets a significant boost. President Trump said he won't allow Iran to control the strait as part of any agreement, which suggests the US wants guarantees, not just promises. Rubio framed diplomacy as the preferred route, but made clear other options remain on the table. For investors, this creates a two-track scenario. If talks succeed, energy prices could drop further, easing pressure on consumers and transport-heavy sectors. If they collapse, expect oil to snap back hard. Airlines, shipping companies, and anyone exposed to fuel costs should be watching this closely. The next 72 hours of diplomatic signals will set the tone for energy markets heading into June. Turning to Washington, the political fallout from rising prices is becoming impossible to ignore. Inflation hit 3.8% year over year in April, the highest reading since 2023, and much of that spike traces directly back to soaring energy costs linked to the Iran conflict. Republicans swept into power in 2024 by promising to crush inflation. That promise is now backfiring. With midterm elections approaching, members of the GOP are openly questioning their own party's priorities. Republican Congressman Brian Fitzpatrick of Pennsylvania put it bluntly, saying that when half of America is living paycheck to paycheck, the word ballroom should not be in anyone's vocabulary. He was referring to President Trump's push for a $400 million White House ballroom renovation and a $1.8 billion taxpayer-funded legal relief fund. Note, unverified. These aren't abstract budget items. They're political liabilities at a moment when voters feel squeezed. The messaging problem is real. Republicans can't blame the previous administration forever, especially when energy-driven inflation ties directly to a military conflict this White House initiated. For markets, the implications are straightforward. If the political class shifts toward aggressive cost-cutting or stimulus to win back voters before November, fiscal policy could swing in unexpected directions. Bond traders and anyone positioned around government spending should be paying close attention to how this debate evolves over the summer. And here's what you need to know heading into the rest of the week. Jamie Dimon just put Wall Street on notice. The JPMorgan Chase CEO told analysts at a New York financial conference that his bank could spend up to $20 billion on an acquisition in the coming years. A deal that size would be the largest of Dimon's 20-year tenure and would test regulators' willingness to let the biggest US bank get even bigger. But Dimon was careful. He called acquisitions a tool of last resort, not a growth strategy, and took a direct shot at executives who chase deals to cover up weak organic growth. His exact words, "I don't want to hear about M&A. What are you doing to grow your business?" Still, the signal matters. JPMorgan is sitting on enormous capital reserves, and Dimon's willingness to publicly float a number that large tells you he sees value somewhere in the market that isn't priced in yet. For investors, this raises two questions. First, which sectors is JPMorgan eyeing? Fintech, asset management, and regional banking are all possibilities. Second, will regulators allow it? Antitrust scrutiny for the nation's largest bank by assets won't be light. Watch for any follow-up commentary from the Fed or the Office of the Comptroller of the Currency. If Dimon moves, it could reshape competitive dynamics across the entire financial sector. Big moves across energy, politics, and banking. Subscribe to stay ahead. This has been the Financial Brief.